from 126 to 60,000 in 4 months. If the downside continues, how do you protect your gains without quitting the market? Because this isn't panic season, this is discipline season. And today, I'll give you a professional 3-layer playbook used by serious investors. Secure custody, defensive rotation, and rules-based hedging. No hype, no hero trades, just survival and positioning for the next cycle. The reality check: we just saw elevated fear, over $5 billion in liquidations on the last leg down. Price: it's probing key zones of 58.7, possibly 54,000. This is where amateurs panic and professionals prepare. The goal now is simple: preserve capital, protect liquidity, and stay alive for the next expansion. Because in bear markets, liquidity is power. Let's start with layer 1, secure custody. Let me ask you something. If your exchange froze tomorrow, could you still access your Bitcoin? Layer 1 is about killing counterparty risk. Move your core stack off exchange, set up a hard wallet, add a passphrase, and use still backups. And here's what most people skip: run a full recovery test. If you've never tested your seed phrase, you don't own your Bitcoin. Now for larger positions, consider 2 of 3 multisig, no single key should sink the ship. Separate locations, documented recovery plan, and quarterly key audits. This isn't paranoia, it's removing catastrophic risk. Before you think about profits, you eliminate failure points. Layer 2, defensive liquidity and rotation. Now this is where most investors fail. They either go all cash or stay fully exposed. There is a smarter middle ground. Your objective isn't to win, it's to reduce volatility while keeping ammunition. A defensive structure could look like 40 to 60% long-term Bitcoin in cold storage, untouched, 20 to 40% diversified stablecoins, up to 10% tokenized T-bills or equivalents, and up to 10% large cap altcoins only if they show relative strength versus Bitcoin. If not, cut the speculative tail. Rotate altcoins into Bitcoin and stables when Bitcoin dominance rises, altcoins bounces are weaker, on-chain liquidity thins. And stay heavier in cash when volatility spikes, VIX is elevated, macro direction is unclear. And listen carefully, stablecoin risk matters. Diversify issuers, diversify chains, and avoid magical yield promises. In bear markets, long lockups destroy flexibility. And again, liquidity is power. And layer 3, tactical, rules-based hedging. Hedging is a seatbelt, not a shortcut to profits. It reduces downside pain without forcing you to sell your core. Let's talk options first. Protective put. Buy a 1 to 3 month put, 10-20% below spot. Balance protection, reasonable cost, low cost collar. Sell an out of the money call to fund the put. You cap upside but reduce premium. Put spread, lower costs, defined protection range. Now perps, partial beta hedge. If you hold $100,000 in Bitcoin, you don't need a full short. You short 0.3 to 0.5 beta. That reduces volatility by 30-50% without exiting the market. But here's the mistake that destroys investors: overhedging, or killing the hedge on the first bounce. Follow rules, not emotions. Rules engine, and this is critical. Market reward structure. Let me give you an example triggers. If weekly closes below and rejects 58.7 thousand, activate 40% hedge for 21 days. If prices reclaim 71,000 with volume and funding normalizes, unwind hedge gradually, 25% per week. No guessing, no reacting to Twitter. Structure removes emotion. Preparing for the next entry, you don't win bear markets by predicting bottoms. You win by being liquid. Pre-plan buy zones. Example ladder: 58.7, 54, and 48,000. Assign fixed percentages. Define reversal criteria. 1. Reclaim of swept level with volume. 2. Bitcoin relative strength versus alts. And 3. Clean derivatives when funding normalizes. When those align, you deploy, not before. Now the recap. Cold storage plus multisig removes catastrophic risk. Rotation into Bitcoin and stables protects against deep drawdowns. Options and partial beta hedges reduce volatility without selling your core. Pre-planned ladders eliminate emotional entries. This is not hero season, this is capital preservation season, because the next cycle belongs to those who survive this one. Now, risks that we have to respect: execution risk, counterparty risk, smart contract risk, and tax complexity. Document everything. Discipline beats prediction. If you want my custody checklist and a simple hedge calculator that outputs short sizing and option examples, comment playbook. Protect your capital, stay liquid, and be ready when opportunity comes back. Stay smart, stay ahead.